Bank, the bank has issued a clarification to the exchanges just a while back saying there's absolutely no change in its capital raising plans. We've got Mr. Rana Kapoor joining in to give us exact clarity on what the strategy is here. Sir, thanks for joining in. I believe it was on the 7th of June when the board had approved this $1 billion capital raising. But can you lay down what roadmaps or what different routes are you looking at? Is a rights issue on the table or not?
There should be, first and foremost, we are very much on track to raise $1 billion in capital in the remaining part of this fiscal year. As was approved by the shareholders at the AGM in June, we contemplate a QIP in the course of this year. And the QIP will be fairly widespread across international investors as well as some key domestic investors. Secondly, we also are covering a number of geographies because we have traveled extensively to myself and my key members of the management team. You know, we have been to the U.S. on investor engagement, to Singapore, Hong Kong, to Europe, and some of my colleagues have also been to, South Africa. So literally, we have covered a lot of ground over the last, few weeks in preparation for a capital raise in the later part of this year. As I'm sure you know, August is a month full of holidays, a lot of decision makers are away, and we have reason to believe with the tailwinds in the economy, with the growth coming back as reflected in our recent financial disclosures for the quarter ended June, as well as for the fiscal March 2016, we are fairly well conditioned and prepared for a capital raise in the course of this year.
Sir, why primarily are you looking at raising over $1 billion? I think your capital adequacy ratio would be in excess of 15% right now, if I'm not mistaken. So what will be the primary use of the capital?
You see, you're absolutely right. Our cap adequacy ratio presently exceeds 15%, and our core Tier 1 ratio is slightly above 10.3%. So we are seeing basically opportunities for growth. There are enough signs to believe that with the tailwinds of the monsoon and with the macroeconomic stability, with India really shining, there are opportunities for a bank like ours to gain market share and to also gain mind share. And we are seeing excellent traction. As you saw in the June quarter, our loan growth was 33%. It was 30% in the March quarter. So we are seeing momentum on loan growth as we are seeing also naturally on our liability side, particularly CASA. So Yes Bank as a growth story for the next 4 years till 2020 is fairly intact. And we have every reason to believe that a good dose of capital will only help us to, grow faster and to grow and capture market share, given our critical size and momentum now as a reasonably well-sized small large bank.
So I have two more questions. One, out of all the options available in terms of equity capital raising, why are you looking at QIP as the route? And the second, you've already started discussions with investors, potential investors, and perhaps you'd agree that the market has been very excited with the Yes Bank story. The stock has seen a huge run-up, and there's always a debate around valuations. What's the feedback that you get?
You see, the feedback is, I must confess, very, very positive because, our bank represents, relatively speaking, a new basket of, Indian growth in sunrise sectors. And we have basically met investors from San Francisco all the way till Tokyo over the last, 2-3 months. And the feedback is very favorable. The bank is now more like a mid to large cap in terms of its overall market capitalization. So larger investors are also showing a fair amount of interest. And we have reason to believe that given the consistent performance, preservation of asset quality, fairly steady growth on our loan book, on our advances, and with tremendous traction in liabilities, with 900 branches, 17,500 people working in the bank, the retail story is panning out very nicely. So the overall growth scenario for the bank, the outlook looks very encouraging. So we will in all likelihood do a qualified institutional placement with very, very high pedigree investors in the later part of this year.
Okay, but no plans to go in for a rights issue?
Well, rights issue is not part of our, resolution. It will be basically a set of new investors because we need to diversify and get, a fairly good overall register of investors which are now, which have a satisfactory appetite for the bank. And the diversity of capital, as you know, is also very, very important. And we have reason to believe that we can get some very, very good pension funds from across the world.
So final question then, sir, since you have that confidence in potential new foreign investors, are you hoping to place this equity somewhere close to the current market price, or do you think you can manage to negotiate a premium?
Well, if you see the overall outlook on the bank by a number of well-established research houses, our bank is re-rating, and we have reason to believe that with a couple of more quarters of performance, we will raise this capital. The strategy is sooner than later, but I think we need to really get to an attractive valuation, which is fairly well underway. And as and when we see enough receptivity and, more good news as is percolating in the Indian economy, I have reason to believe that we will be out in the market in the later part of this year.
All right, Mr. Kapoor, thank you so much for joining us and clarifying on those fundraising plans that Yes Bank have. They're on track to raise $1 billion in the later part of this year. Let's take a break on that.